All right, welcome everyone. This is Bob Maurer. It is Monday, the 24th of March, around about 4:30 my time. I want to do an update of the seasonal futures spreads strategy, see how things are looking for the few ongoing spreads we have here. Got a little bit of housekeeping to do, in as much as one of them last week timed out. So we'll see how that one sized up. That was the cotton, and then we've got the two that are in the livestock division, both in the beef market, and those are ongoing. So we'll see how those are playing out. So if we hop into the portal, you'll see the most current PDF version right there. And this is it for this week of 323. And this is what we're working with. Top row, bull spread, cotton, flat, timed out, did not work out, ended up with a loss. So we'll see how that one evolved throughout the seasonal. And then also 350 in the middle, bear spread in fat cattle, and then 351 bear spread in feeder cattle. We'll see how those are looking. And that's it, just those three. I'm in the midst of analyzing several other spreads, and once I get to the point where I'm confident with them, I will go ahead and publish them and let you know, and then we can look forward to those too. So let's hop over to the charts, take them one by one. First of all, cotton. So cotton's been challenged for quite some time, and it worked its way into our spread. What was kind of interesting was that we withstood a pretty good move to the downside in the front month futures contract through this little break here from about Feb 18 into March 5. And then the market recovered a bit, moved sideways, and then the spread, the actual futures market, broke just a little bit after rallying, and that's when this spread really just caved. And as you can see, it ended on the 18th of March, and that was this bar right here. So our average price was somewhere in the neck of about 120, negative 120, if you were the more aggressive average in type trader. And more conservative down there, only entry at negative 137. This spread on this last day of the seasonal had a high of negative 126 and a low of negative 144. So that was an 18-point range. So depending on when you got out on the 18th determined how much of a loss you might have taken. So I'm not sure what to say. If we just go off the close, then the close was negative 141, and that would have been obviously a loser either way for either the level 2 traders or the definitely the level 1 traders. So basically this one did not do what it was supposed to do, ended up with some level of loss, and it'll go off our books as a loser. It did not do what it was supposed to do. It pretty much rallied out of the gates, got to that first target level, broke down as cotton futures started really pushing to the downside, moved sideways while the market was recovering. That is the front month recovering, and then it broke down pretty considerably. I'm glad we're out because today it made new swing lows, so it's good to have our risk in place and stick to our trading plan. All right, so that's 347 bull spread in cotton. Has not done what it typically does seasonally. That's both for the spread and for cotton futures, and it worked out as such, going against us in the seasonal too. All right, so that one's going to go off the board as a loser. Then we've got the two remaining spreads. Fat cattle here. So this is strategy number 350, bear spread, live cattle futures. And I revised this back on March 7. If I remember right, we lifted both the entry levels and the target levels and the stop level. And I'm glad we did. Got a little bit of price improvement. Well, more improved than the original numbers we had in terms of entry levels. And also moved our stop a bit away there too. So market's been on a pretty good rally, as you can see. Generally speaking, zooming out, you can see the range for this is anywhere from about this low of negative, or this low of 100 over, to a high of 300. So that's a 2 cent range. That's an $800 range in that zone. We did have this little peak up here where the market rallied above that zone but didn't hold. It probably lasted about 2 weeks, and then it really just took off to the downside as the live cattle futures corrected. And then since then, the market has actually had a pretty strong rally. So we're still within the bigger picture range, and that is what we were looking for. Seasonal is bearish. We're looking for the market to stay in the range, and so far it's accommodated. The high on Friday, this bar here, was 380. Our stop is at 420, so we got within 40 cents, which equals $160 in real dollars, of getting stopped out. But the market stalled, closed towards the middle of the range on Friday, and then today basically had a little bit of a push to the downside. So we need to see more of that. We just need to see this thing continue to fail, and hopefully a test of those range lows. Now, I did walk it forward, and I want to keep the targets where they're at right now. Okay, we'll see how this thing trades throughout the week. But it certainly may be, I think, that the probabilities that these targets are going to come up a little bit, bottom line. So I like our entries. We know where our average is. Both entry levels are in. The average level, the average price for those who got in at level 1 and level 2 would be about $295, if I have my math right there. So if you're an average in trader, you should be sitting with some level of unrealized loss. If you're more conservative and got in at the entry level 2, you should be sitting with some level of unrealized gain for the moment. And really, again, all we need to do is see this thing fail after now retesting the top end of the range. We'll see how that plays out. That is strategy number 350, the bear spread in live cattle. So now let's hop on over to the last one, which is feeder cattle. All right, strategy number 351, bear spread in feeder cattle. And you can see we're about a quarter of the way into the seasonal window, give or take. And we have only one entry level that's up here at negative 165. And we have just been drifting lower. Finally got a bit of a spark starting on Thursday of last week, follow through on Friday, and seesaw action today, but ended up at the top end of the range. So we'll see if this thing wants to continue to push on up. So this is the bear spread in feeder cattle. I want to keep the entry level where it's at, keep the stops, keep the targets. No changes at the moment. Come the end of this week, I'm going to walk it forward, see if it's still viable, and whether or not we need to tweak either the entry level or the exits. But as of right now, no fill and no change to the strategy. That's strategy number 351, bear spread in feeders. So to repeat, just the 3. Cotton, we're out. It timed out with some level of unrealized loss. Basically collapsed throughout our seasonal and really couldn't hold those gains it tried to have. The live cattle market depends on whether you're the more conservative entry or the more aggressive average in, as to whether or not you're sitting with a current level of unrealized gain or unrealized loss. But no change to that one at the moment. And then feeder cattle, no fill, no change. So that's where we're at. Alrighty, decent volatility in these markets as of late. I think they're trying to figure out what's next with the tariffs. April 2 is our next big date in terms of that element in the marketplace. And then also end of the month, we get the grain stocks number, the March 1 grain stocks, and prospective plantings. And those both have the ability to influence our livestock markets, because obviously the grains are an input. So if something wildly bullish happens or bearish, that could work its way into the live cattle and the feeder cattle markets that we have. So those are important to us, even though it's not one of the particular commodities that we're in, just because they can be influenced by the movements. All right. So that's what's on the horizon. And again, I'm getting towards the tail end of doing analysis on a number of other seasonal spreads. Hopefully I'll get those published in the next couple of days, and then we can start working on those. All right. So if you have any questions, comments, anything of interest on anything I discussed, feel free to let me know. I'm going to leave it there, and thanks so much for watching.